Good evening, everyone. Welcome to another session on dollar INR. It has been a holiday truncated week. We just had 3 working days this week. So let's have a look at what is happening in dollar INR and what could be the clues for the future. Okay. First thing, we have looked at the gap that we saw last week. Sorry, we saw the gap last week. The big down gap at 88.72 to 88.39. Okay, and then the market continued downside, and then we have seen a slight sideways movement here. Okay, this portion. I will come to that in the offshore chart as well. This is the onshore chart. Okay, so after a large down gap, we had seen a decent amount of sideways movement. But in addition to that, I also want to show you these gaps which are unfilled. Okay, so this gap is at 87.27 to 87.31.32. So that is the small 5-6 paisa gap here, and the lower side, the gap is between 86.67 to 86.77. And what we have seen in dollar INR, that these gaps typically close up. But remember, there is a gap on the higher side as well between 88.39 and 88.72. Okay, so that is it on this chart. I will try and zoom this chart again. I want to show something more. Okay, let me try and zoom this chart. Okay, so let's see this zoom chart. If you look at the situation here, okay, it has gone sideways. It has gone sideways. These 5 trading sessions, it has gone sideways. We are seeing long shadows, upper shadows, lower shadows. Means the prices are going higher, closing lower, prices are going lower, closing higher. So it is some kind of a confused state here, some kind of a confusion here. And after a big down gap, that confusion probably tries to indicate that things are going to change. Okay, and obviously the change can happen either on the upside or on the downside. That time will tell. But a confused state is very evident in this kind of a region. Okay. Now let me come to the other side as well. I will show you the offshore chart. So this is the 24-hour chart, and like the offshore chart, there won't be any holidays. So that had smaller number of trading sessions. This will have 2 extra days. So no holidays for offshore market for Diwali. So if you look at this chart, I had already explained in the last week that we have this linear regression channel which is consistently upwards, very clear. We have these moving averages going higher, the yellow line which is the 100-day and the pink line which is the 50-day. But what is interesting to look at is this pink line again has gone sideways. The pink line was increasing, the yellow line is still increasing, sloping upwards, but the pink line has become sideways. It has started to slope sideways and the prices are still below that. Okay. Again, another thing to note is the previous peak 87.95 which we saw here, the prices are holding slightly below and very close to the previous month, September month's low between 87.60-70. Okay. So bottom line is this region around 87.65 to 87.75-80 looks to be a short term support region. So what should you do? Importer should look to hedge some portion of their exposures. Remember, when the prices have been going higher like this continuously, the importer rarely got a chance to hedge. But now the prices have come down. It has not come down to a very low level, but it has come down to some kind of a short term support region. So dollar importers should look to hedge some portion of their payables. Okay, you cannot keep entire exposures open, you cannot hedge the entire part. You should look to hedge some exposures, not very large, probably 15 to 25-30% depending upon your risk appetite and internal costing and benchmark level. So some hedges must be taken. You can look to do some forwards, you can also look to do some vanilla options. Now since the prices have stabilized here, the volatility would have come down and vanilla options would be slightly cheaper. Okay. Now for dollar exporters, you have enjoyed this rally. Okay, you have enjoyed this rally, you would have hedged, I am sure. You would have seen my videos. I have regularly advised dollar exporters to hedge. If you are unhedged at this situation, it is better that you do some kind of a vanilla option rather than doing forwards at this low level. Okay, you can look to do some forwards, but predominant exposure should go on the vanilla options side. Okay, so do keep hedging, don't look at keeping unhedged exposures. There are a lot of news about India and US reaching some kind of a trade agreement and the tariff might come down. Because of that rumor, we have already seen a big recovery in the rupee. Probably when the announcement is made, we can see some more downside, okay, probably around these levels. Okay, I want to show you, get back to the onshore chart, and I will try and show you that region. Okay, so this region is where the big chunk will come in. Probably if there is the announcement that the tariffs are reduced, now rumors still now, but when the actual announcement happens, probably we might see some kind of a rupee recovery, further recovery, and these gaps might fill in. What is the usual characteristic of dollar INR? But remember, the rumors are already out, the markets have discounted, so the big move was already happened. So when the actual news actually comes in, probably there will be some degree of move. Okay, so that is the place where these gaps might get filled in. Okay, but remember, keep hedging as I suggested, both exporters and importers, and the hedging instruments that I recommended. So that is it from my side. Have a great weekend ahead. And to follow more such insights, please join our WhatsApp community.